Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a phenomenal day. Happy Friday to you. It's finally happening, folks. We finally filled our CME gap. It felt like it was forever, but we finally got it here. So decent chance we do pivot and bounce from this area, not because it's one thing, because there's other areas of confluence here and just some important things to kind of recognize. So be sure to stick around. We got some really critical things here today. We're going to talk obviously about altcoin season index, fear and greed index pulling back. This is a very good sign with the price action. We're starting to see open interest retrace, but that's normal and consistent with ETF net outflow effectively a couple of days ago. There's a bit of a lag here, but this does show that we had a recent outflow. The things that we really got to recognize those, we got a lot of falling wedge patterns on a lot of coins that are starting to bottom out in their support range. So XRP and Bitcoin, of course, SUI did lose its ascending trend, but we're in our support range here as well. And same thing with Solana too. You can't see it on the charts. I got it on a different chart, but this 0.618 fib level between 160 and 165 approximately is that heavy area of support. So we're going to talk about that as well. So stick around, obviously make sure you hit the like button, comment below. Before we get started though, we do have a new deposit reward bonus here for BitUnix. Be sure to check it out, link down below. If you use my link to register, you'll also get a futures bonus if you're a first time trader. So let's take a look at, let's go ahead and go with the back end here first. Let's start with the overall market setting here effectively. ETF net outflow, we can see here as of yesterday, 2 days ago rather, this is a 2-day lag, the 30th of July, we saw a negative outflow for Bitcoin and basically neutral for Ethereum. So that it was kind of like the earliest signs. The problem is we can't really see this ETF outflow. It takes a little while to post, but that's kind of a reflection of the fact that we should see a pivot and a bounce from here, because last time we saw this, the price action pulled back for a couple of days and the price action recovered. So it's consistent with a descending type of trend that we're in right now, which is technically bearish, but also it's a bullish type of macro structure. So I'll show you more so on the charts what I mean by this, but I'm actually very excited about this. We can see open interest is right there, that 3.5 billion range. That's actually good. Hopefully we can maintain that. It is down, of course, from yesterday, but as long as we don't, drop it below like 3.3, 3.2, we're in pretty good shape. But fear and greed index kind of reflecting the fact that we're starting to see more fear, which is good, or less greed, I guess you could say. And these are usually times you want to try to start buying. As the fear and greed index comes down, that's when you start to add to your bags. Now, when we take a look at altcoin season index, this is just kind of a reflection of where altcoins are at, poised with Bitcoin, and we can still see a lot of good performers versus Bitcoin, but we're starting to see this average itself out. When we're in the 30s for altcoin season index, that's generally a favorable sign, but we can recognize here we're now under 1.5 trillion for market cap. So we're going to take a look at the overall altcoin index here, as well as spots, and kind of see where we're at for the for stable coins, and kind of just understand what that looks like. Okay. So first and foremost, let's go ahead and start off with Bitcoin and see where we're at here, because there's some good stuff we want to kind of recognize here when we look at the back end data. So once more, we got our falling wedge pattern, or you could even approximate this as a bullish flag pattern. They're kind of similar in a lot of ways as they start to compress and the price goes down. The key takeaway here is that we have a lot more bids than asks entering the market. So people are buying these dips. It's kind of a good sign there. There's more buy orders. When we take a look at the back end here, we can recognize too, from an open interest perspective, the next key areas of support is 110 and 111.5. So you could approximate that just at basically 111,000 as a good average there, but 110 to 112 is kind of that range of support based on open interest. And we want to recognize too here, liquidation short delta is at 14 billion. It's quite a lot. And keep in mind, when this happens, generally you don't want to try to take a log against it, right? But in Bitcoin's history, specifically this year, anytime we have an overextension in either direction with liquidation delta, either long or short, it will naturally correct itself. Outside of when we ran upwards of that 120 some odd thousand, right? So for the most part, we are experiencing within this range that we're in, descending range, that every time the lower lows are established or essentially targeted, then we see a reversal here. So I think there's going to be shorts are going to have a bad day either today or this weekend. That's my speculation based on this metric alone. And we take a look here at liquidation. We can recognize there's a pretty heavy concentration just below the price, 113,700. There's still a possibility we see that level hit. So try not to get it in your head that we're like totally breaking bullish and we're good to go. We can see here, however, though, that retail longs are at 95%, and once more, pretty low in open interest here recently. So generally when you see this this difference here, it's not necessarily a bullish sign. It's not something we want to try to take a long into. And when we take a look here, this is just quickly a coin stacker kind of showing us here. So far, we see a lot of money flowing into Ethereum, and I would say the ETF inflow is still more green than Bitcoin, which is a good sign for alts, honestly. I like seeing that. So what we want to look at here, let's go ahead and jump in. Now that we kind of have a baseline or a foundation, we know our CME gap has been filled. What does that look like on the charts? Well, let's quickly recognize in the daily time frame, there is likely going to be, likely going to be seeing some bottoming pressure here. In other words, money flow index is getting closer to 20. When we see 20 on the MFI, you typically see a bounce or a recovery. It can be 30 as well. So if you look here previously, every time we hit 30 on money flow index, the price pivoted and bounced from there. Okay. So it does tend to give us that reversal type of setting here, right? Because what basically implies is that there's been money flowing away from this coin for quite a while, 1, 2, 3, 4, 5 days so far, and that's a good sign in the overall sense of seeing a pivot, right? Now, based on this year's progression and how things are working, it seems pretty safe to buy this kind of dip. Normally it would be a bad idea, though. That's the funny thing. But this year it's almost a reverse of what you think, because once more there's so much buying pressure in the 110K plus range that you're pretty much better off taking a long at every bottom and shorting the top. That's kind of the concept there. Overall, though, there's nothing else super significant here letting us know we have a bullish convergence. The truth is, if you take a long right now, it's considered to be a high risk. That's the truth about it, because everything's pointing down right now. But that's all the more reason why the market makers are going to destroy the late shorts and push the price action higher. It's just a consistent rinse and repeat. We're seeing this over and over and over again. 4-hour time frame reflects here, and just to quickly note too as well, we got some good confluence below the price action. Again, folks, confluence. It's not just a random fib level that we're trading on because some Elliott wave guy tells you that it's a good idea, right? The whole concept here is that we see the 200-day SMA hanging out there at 115K. We've got our 0.618 fib level there, basically our golden pocket. We've also got our local low that's been retested and a CME gap that's been filled. So those are a lot of confirming factors outside the fact that, yes, we do still have an FVG, fair value gap. That's what that stands for. That's still below the price action from our significant wick up there. So once more, 111 to 113, just approximate 110 to 112 as per our open interest range. There's a solid chance that we do see that area either retested or the current range right now is good. So the key takeaway here is, careful taking a long today, but I'm leaning more towards taking longs based on overextension and how well altcoins are holding their current support ranges, which is effectively their previous highs working as new lows, right? So that's where we're at there for Bitcoin. Let's move on to Ethereum and talk about this guy here. This is one I'm probably the most interested in taking another long with. We took a long from like 37.75 to 38.50, got in and got out, and that was it, right? That's the whole concept. Adjust your stop loss higher as you move into profit. That's the way we trade in our community. All that being said, what I want to get at here is that 3,600 is that key area of support based on open interest and also the point of control. Now, once more, they're effectively the same thing in a lot of ways. It just depends on the time frame that you're using. But we see confirmation there with our 0.786 fib level, our local bottom. A lot of reasons why we're probably bottoming out here. We're also overextended where this is our 8th hour, or basically 36 hours of continuation in the same direction without slowing pressure. So now that we're seeing this $3,600 value, we're more likely to pivot and bounce off of this range here. So let's go ahead and take a look at our backend data for Ethereum and just kind of get perspective here, because this is the open interest area I was referring to. We can see 3,600 is that, or sorry, 3,560 is that heaviest concentration of open interest. But once more, our second heaviest is at 3,640. we're pretty much right there at that point right now. So open interest does reflect solid amount of support at approximately 3,600. We can see the same thing here with liquidation short delta, super high. Once more, not usually a good best practice to try to take a long against that, but honestly, that is almost irrelevant in a lot of ways as far as just the way the market is manipulated right now. So right now that a bunch of shorts are stuck at 3,600, market makers are going to punch them up and take the price higher. Okay. Now when we look at the back end here, just to clarify too, liquidation, there's liquidation left at 3,400. So that's like the next heaviest concentration. Otherwise, as per usual, 3,900 to 4,000 is that upper range. So 3,400 would be the next potential target area for ETH. If we were to see that happen, let's quickly jump over to the daily and just see that we are still in a pretty good situation here. There is a lot of fair value below the price. We also have a support range here. That's a previous support range from a macro perspective, but still relevant to note. We do have a lot of support between 2,800 and 3,150. I don't really think we're going to see that level though, unless Bitcoin makes a serious run to the downside, which is still a possibility, right? A lot of selling pressure is happening right now, and it does make sense to go with the grain and to not consider a long in the overall sense. All that being said, from the macro perspective, again, 3,150 is that big picture support. We did lose 70 in the RSI, which is actually good. That implies you should have secured profits on your long, as I teach in all of my videos. Same thing here as well. MACD is diverging officially, so there's definitely a divergence here. So if you do end up taking a long at 3,600, just know it does carry high risk. But once more, a lot of support in that range too. That level here is heavily guarded. So if Bitcoin doesn't pull back any further, I think it's a solid consideration for long in that 3,600 range. Solana, what are we looking at here? Let's go ahead and take a look at Solana. Let's jump into the backend data first, but just respect the fact that we're in a descending trend. We're establishing lower highs, lower lows, and we're also overextended here for a 36-hour continuation. When we take a look at the backend, we want to note though that 168 is that point of control. Also the local bottom, as per usual, because the previous high turns into a new low. So if you see this previous high of 168, that is essentially the new area of consideration for a long. Once more, as per usual though, large liquidation delta to the downside, implying we have more selling pressure than buying pressure, i.e. higher risk to take a long. We can look at liquidation and recognize here that 145 to 155 is that next area, that pocket of liquidation here to the downside. And jumping over the charts here, we can recognize too as well on the daily time frame that we did lose our SMA, our 20-day SMA, but we got the 50 and the 200-day SMA hanging out at 160, 161. So that in combination with the previous high range leads me to believe, once more, with confluence, the low 160s to mid 160s, i.e. 160, 165, is a solid consideration for a long and or a nice good support range there where the price should pivot and bounce. Once more, we may not even see that. The price could go straight up from here, but the likelihood of that is fairly low. We just need to kind of, in most cases with a situation like this, you want to be able to kind of wait and see how altcoins behave versus Bitcoin. Speaking of which, let's take a quick look at market dominance. And we can see Bitcoin dominance is slowly increasing. Okay, and I forgot to take a look at this here earlier, but stablecoin dominance is increasing too. So we're seeing more money flowing away from Bitcoin, going into stablecoins and not into altcoins. That essentially implies that it's not a good time to buy alts in a lot of ways. Okay. Now, does it mean you just consistently sell? Really depends on the kind of trader you are. But for the most part, you either want a dollar cost average into your position on the way down or effectively avoid trading for a little while. It's probably the best, in your best interest to avoid trading. That's probably the best recommendation. So anyways, that's the whole summarization there for Solana. We're at a key level support here at 168, but we lose that level. The 155 to 165 is that next range to consider getting in. We have more support in that area. All right, taking a look here at SUI, seeing what's going on. Lost our ascending trend, not generally a favorable sign. We are also in our support range here between 0.5 and 0.382 fib level. Once more, confluence there with our previous high working as a potential new low. All right, so hypothetically, we continue higher from here. We can see somewhat of a broadening wedge pattern, and these do tend to have a tendency of breaking to the upside, okay, especially since it derived from the downside. So there is a propensity here for us to go higher based on this continuation type of pattern. Okay, now that late shorts are getting trapped, we may very well see a rip to the upside. Because once more, everything here on the charts tells me you want to consider shorting. However, with all the supports and the previous, and just basically on how well the market is manipulated right now, there's a solid chance that we see the price action recover here, especially now that people are just FOMOing into short positions and trying to catch the cascade effect, which may or may not happen, but I'm leaning more towards it not happening based on just how manipulative the market is recently. And it just feels like every kind of trade setup that seems so too good to be true, it definitely is, right? So it's like, oh, this is a perfect short opportunity. Let's short the bearish back test. Nope, it's gonna just go ahead and rip the price up here soon. So just be mindful that that could happen. Now, when we look at SUI from a macro perspective, this is the 1 month time frame, by the way. We see a pretty big gap here. There's not a lot of open interest in the $3 range. Or at least the low $3 range. We see what, 320, 310 maybe, but there's a low concentration. So the price just moved up too fast from before to have any open interest established. All that said, we got about $1 billion in liquidation short delta, but this is fairly well overextended. Likelihood of a pivot and a bounce here soon in the support range, but we can see from a larger perspective, 320 to $3 even is that area of liquidation. Okay, so SUI is in a very precarious situation here. I'd be very careful trading this coin right now, but the support range does give me some consideration for wanting to take a long. Once more, I mentioned between 340 and 360 was my original thought process. At this point, it seems like a viability. We just got to kind of see how altcoins continue to behave today. If Bitcoin dominance can start slowing down and just kind of hang out and go sideways, then we'll be in good shape. We'll start to see altcoins recover. Between now and then, it is generally considered to be high risk to take a long right now. And it does feel a little late to short. That's just my personal opinion, but I don't really like shorting scenarios like this, especially with all just how funky the market is. Speaking of funky, let's take a look here at XRP. This is the one coin that's actually looking quite strong comparative to others. In other words, we have a falling wedge pattern. Once more, just to reiterate and reaffirm, don't trade patterns alone. You trade them with confluence, okay? Same thing with fib levels too. I'm sure you've probably gotten that into your head by now because I say it a lot, but don't just, take a trade based on fibs, okay? Now, all that being said, we see a 0.382 fib level here at 298 that's also running consistent with our previous high, working as a potential new low. Keep in mind, we're bearishly backtesting this trend here, right? So the likelihood of the price going lower is higher because when you break through a key level support such as $3, and then we have more volume above the price at 315, the probability of going lower is higher, okay? So there is that. Now let's take a look at the back end though and see if there's anything that's reflectant of, reversal, etc. We look here, we have a very significant amount of open interest. This is the monthly, by the way. We can see open interest at $293 and $3 even. So if we close above $3 today, I think we're in pretty good shape here to see XRP recover. Once more, there's a lot of people buying at that level. Overall, liquidation short delta is also high, but it's tapering off a lot faster than other altcoins. And we look at liquidation in the back end, 280 to 290 would be that next heavy area of concentration. So looking at the charts here, when we look at the daily time frame, we're still below the 20-day SMA. Obviously, we talked about that yesterday, but we're above all other moving averages. So generally still favorable in this uptrend. Even though we could still continue lower, the likelihood of further upside overall is higher. That's the concept. Other than that, we can also see our money flow index is getting really close to that overextended state. Last time we hit our money flow index in that low 20 range was June 6th, and that was this guy right here. And the price went sideways and inevitably took off. Okay. Now, granted, there were some catalysts, of course, at that point to push the price action higher, but for the most part, when you see money flow index getting low, it's usually a good sign to buy because of the simple fact that we're seeing too much money flowing away from this coin, and it becomes a good opportunity again, right? And that's how you interpret money flow index. In a lot of ways, when it becomes overextended, you will see a short-term reversal at the very least, or a dead cat bounce, little things like that. But at this point here, falling wedge pattern is a bullish type of pattern because the fact that we're working onto our descending trend, we've swept these late longs here, and the price is more likely to recover moving forward. Once more, high risk trade setup if you're considering a long right now. There's no other way around it. Same thing goes for every single coin we just covered. So don't walk away from this thinking that I'm truly bullish. I just think that we are in a manipulative market right now. And 9 times out of 10 this year so far, every time we get confirmation to take a short, the price goes the opposite direction. And we're getting tons of short signals right now. In other words, a lot of things saying, hey, you should take a short position. It just feels weird on a Friday to want to take a short after significant selling pressure. And majority of all weekends this year have been bullish. So those are the statisticals for you folks. Statistical probabilities in whichever way, shape, or form. So I hope that made sense and I described it correctly. Thanks again for being once more an amazing part of my life. Don't forget to like the video, comment below, join us on Twitter, Telegram, Discord, whatever works best. And Cooper sends his regards. Hope you all have a good one. We'll see you next one. Take care.